This is not financial advice. I am not a financial advisor. This video is for entertainment purposes only. Title: Stagflation, a unique economic challenge. Introduction. Stagflation is an unusual and challenging economic phenomenon characterized by the simultaneous occurrence of stagnant economic growth, high unemployment, and high inflation. This rare combination of economic problems defies conventional economic theories and poses significant difficulties for policymakers attempting to address it. This essay will examine the concept of stagflation, its historical context, causes, consequences, and potential policy responses. Historical context of stagflation. The term stagflation emerged in the 1970s, primarily in response to the economic conditions experienced in the United States, the United Kingdom, and other developed countries. The most notable period of stagflation occurred during the 1973 to 1975 recession, which was marked by a sharp increase in oil prices due to the OPEC oil embargo, high unemployment, and soaring inflation rates. 2. Causes of stagflation. Stagflation is a multifaceted phenomenon with various potential causes, including supply shocks. Sudden disruptions in the supply of essential goods, such as oil or food, can lead to stagflation. An example of this is the 1970s oil crisis, which resulted in a rapid increase in energy prices and triggered high inflation, alongside economic stagnation. Structural unemployment. Technological advancements or changes in the economy can result in a mismatch between worker skills and the available job opportunities. This mismatch can lead to persistent unemployment, which may contribute to stagflation if coupled with inflationary pressures. Inappropriate monetary policy. If central banks maintain loose monetary policies for too long, they can inadvertently create an environment conducive to stagflation. This occurs when easy money policies fuel inflation without stimulating economic growth or reducing unemployment. 3. Consequences of stagflation. Stagflation can have far-reaching consequences for the economy, including reduced consumer spending. High inflation and unemployment can lead to reduced consumer spending, as households struggle to cope with rising prices and job losses. This can further depress economic growth and exacerbate unemployment. Eroding purchasing power. High inflation during stagflation erodes the purchasing power of money, which can harm savers and those on fixed incomes. Limited policy options. Stagflation presents a unique challenge for policymakers as traditional tools for combating inflation, raising interest rates, may worsen unemployment and slow economic growth, while measures to stimulate growth, e.g., increasing government spending, can exacerbate inflation. Policy responses to stagflation. Addressing stagflation requires a delicate balance of policy measures, which may include supply-side policies. Implementing policies that focus on increasing productivity, encouraging investment, and improving labor market flexibility can help address the root causes of stagflation. These policies can potentially promote economic growth while reducing inflationary pressures. Credible monetary policy. Central banks can combat stagflation by maintaining a credible commitment to price stability. This may involve setting explicit inflation targets and adjusting interest rates to achieve those targets, even if it means short-term economic pain. Structural reforms. Addressing structural unemployment and skill mismatches through targeted education and training programs can help reduce the unemployment component of stagflation. Coordinated international action. In some cases, coordinated international action may be necessary to address global supply shocks, such as those related to energy or food prices. This can help mitigate the inflationary pressures associated with stagflation. Conclusion. Stagflation is a complex and challenging economic phenomenon that defies conventional wisdom and demands innovative policy solutions. By understanding its causes and consequences, policymakers can better address this unique economic challenge and promote a sustainable and stable economic environment.